Impressive move from the benchmark Nifty in today's trade, gaining 172 points, managing a close at 16,973, a tad below the psychological 17k mark. Not bad, not bad. But can it sustain? Will it sustain? If it slips, then are we looking at further downsides? Let's try and evaluate that in today's market analysis. Good evening, traders. 22nd December 2021, 19 minutes past 8 p.m. Indian Standard Time, and we have a short-term bounce back in our hands. The blue zone, which we are calling the zone of hope, is so far so good, turning out to be a decent source of support. We have a 2-day bounce back, and after a long time we can see that the index on a day-to-day basis have created a higher high, higher low. Now, what is the quality of this move? Unlike yesterday's close, wherein the index slipped from its intraday high, today was a different story. Today, the index manages to close near the highest point of the day's trade. A look at the 75-minute time frame, and we can notice that the index has managed in the last hour's trade, has managed to take out the swing high. This is a good sign. And an important point is, as it gains, it's going to now deal with the resistance zones which we had drawn before, essentially erstwhile lows, gap down levels. The trend is down. We have the anchored VWAP also coming in close there, a little bit of volume profile playing out here. So there's no doubt that the psychological level of 17k all the way towards 17,100, 150 is the immediate short-term resistance for the index, is the important trend reversal level for the index. So going above 17,100 is not going to be a big deal now that the index has managed a 2-day bounce back. But to sustain above that level is the key point, because in a downtrend, selling kicks in after a bounce back only, right? And this is the bounce back. If you allow me to check the volume profile of this recent 2-day bounce back, then we can notice very clearly that the point of control and the most of the volumes have happened close to that 16,900 level, which is all right because most of the candles have hovered near around 16,900. So that's not a big deal, but the trend is still down. Take a look at the 75-minute moving averages. It is still down. Take a look at the daily time frame. The trend is also still down. The moving averages are still pretty well sloped on the downside. So I personally do not think that it's going to be a one-way V-shaped recovery. May not, but I personally do not sense so. And I feel that 17,100 is where it's going to slow down a little bit. And it's then that the shorts, the pullback shorts will get excited. It's then that the short-term long traders would really want the index to sustain above that. So long story short, so far so good, decent bounce back, volumes okay, participation is all right. In terms of levels, 17,100 is where it's likely to slow down. And post the slowdown, will it sustain or will it not? Day's low from here on, today's low, which is at 16,832, plays as the short-term trigger point for any kind of follow-through weakness, if at all. And going forward, we'll maintain this. If tomorrow we find a higher high, higher low, then the day's low will continue to act as the pivot point for the next day. So strategically, stay put, just wait and observe whether this is just a short-term bounce back in a downtrend, or is this it? As of now, in terms of price, it's just inched close to the level which will help us to decide. And so we need to give the index couple of days, if not more than couple of days time, to give us that clarity. In terms of the other sectors, we do notice that real estate, small caps, Pharmaceutical also gave a pretty good move, though the sector was not doing so well at the beginning, but then it picked up. Metal also bounced back. But one thing is very clear amongst most of these sectoral indices is they are all in a downtrend and they're bouncing back, which means that 60% chance is still there for a follow through leg down, and 40% chance is there for a trend reversal and show of strength. So keeping this back of our mind, we should strategize our trade for the next day. Bank Nifty up little over 1%, and now you can see how nicely it is bouncing back from its own personal blue zone, but pretty sharp downtrend thanks to the private sector banks especially maintain the same view over here. It's got a pretty sharp gap down close to that 35,300 and little above 35,600, 630. So it's going to deal with that gap going forward. Let's quickly get the scan done because I might just get carried away with the market analysis and I'll just miss out. So Nifty 200, the InstaView scans that we do. Let's quickly load this. Okay, it's opened on my other. So let's run this. Inside bar, torn power, not bad. A hammer followed by a couple of spinning tops, definite signs of slowdown for an intraday perspective, not bad. Ipca Lab is an inside bar, but the size of the body is fairly big enough. The good thing is yesterday and today's high are very close to each other, 2034, 2036. So this can act as a breakout level kind of, but the trend is very weak. So I wouldn't chase this. Fortis is still relatively better off. It's slowing down after the leg up. It's more like a symmetrical descending kind of a triangular pattern. So this is better off. Wipro doesn't make sense. It's just slowing down after the recent move up. So is Infosys. So these inside bars are not worthwhile. Natco Pharma, after the sharp sell-off, not bad. Looks like a belt hold. In fact, looks like a morning star also. So Natco Pharma also stands out. Petronet also stands out. Couple of small bodied bars. TCS is a breakout counter here. Very clearly, the stock has held itself pretty well. 36.41 is your breakout level. ICICI Pru doesn't look so good. Amongst the other inside bars, I think the ones we discussed stands out better. State Bank of India, bullish Arami pattern. We would have loved to see that the second bar, which is the positive bar, would have been a little smaller in size, but it's got no positive divergence to back it. So I wouldn't chase this at this juncture. Cipla, no, there's no trend to call it a bullish pattern. This is also good. So SBI, Bank of Baroda, it seems like PSU banks are slowing down. The selling in the PSU banks are showing early signs of slowdown and can give us a bounce. Bajaj Finserv, no, it's not a bullish Arami pattern. This is a nice looking bullish Arami pattern. Castrol, no divergences whatsoever in none of these trades. But one thing that we found out that PSU banks, SBI, Bank of Baroda has started to show early signs of slowdown. So one can keep that in mind. High delivery percentage volumes within the Nifty 200, 70% and above delivery percentage, and at least a lakh of shares got delivered. That's our criteria. We don't want too many stocks to get confused. And we've got two stocks, Adani Green and Gland. Adani Green is one stock, if you notice. 73 is 81, 73, 75, 61, 49, 55, 72, 80, 88. So in the last 10 days, almost 8 days it has, or 6 or 7 days it has had delivery percentage above 70%. So that's not a bad information. Though the stock has shown enough strength, it has not come down at all, and it's still seeing itself pretty high delivery percentage level. So looks like a good stock. Gland also picked up a little bit of delivery percentage in today's trade. It looks like on the verge of giving us a breakout. I wouldn't chase this, but I'll be more than happy if it pulls back a little bit towards that 36, 60, 65 levels. I think that's a better level to get into Gland. For the rest of the scan breakout, I would love to see stocks which are showing some signs of consolidation in this kind of a market, wherein resistances are nearby, and it will try its best to break out on the upside. None of them actually stands out because all of them are short-term bounce backs, so I won't chase any of these stocks. Oracle long is an intraday trading strategy wherein we look for a possibility of a short-term intraday bounce back for the next day. India Mart looks good. India Mart looks good above today's high of 66.85. Nice doji on the daily time frame. We spoke about Bank of Baroda, that's also good. LIC housing, not so impressive, pretty well full-bodied candlestick today, low volumes. India Mart, Bank of Baroda better off, so is Castrol India. NMDC, because of this very high ranged bar yesterday, doesn't qualify for a good setup. Siemens, nice. This looks nice for a short-term intraday move. Range contraction is pretty impressive. 23.89 is today's high, looks good. Endurance, no. Tata Elxsi also not so good. Grasim is a very nice trending counter, and that can be looked upon tomorrow above the high of 1662. Shree Cement, no. MGL, very strong downtrend. It can give us a move, but there are a lot of resistances up there for the stock to deal with. Same goes with Hero Motoko also, though you will feel really kind of tempted to take a trade in this kind of a stock which has gone through this kind of a correction, deeply oversold levels, intermediate divergences kicking in, range contraction, very small spinning top. Not bad. 23.66 for a day, one can take a trade. NTPC also falls in the same category. So quite a few of Oracle longs. HDFC Life, a beautiful doji for 2 days. The stock has created inside bars yesterday and today. So 2 inside bars back to back generally shows the contraction. Dalmia Bharat, because of the yesterday's long range, is also not a very good candidate. ACC, yes. So as I click through this, quite a few names actually looks promising for a short-term bounce. So if these play out, if these stocks that we were just discussing right now, they play out on the upside just for tomorrow, then the index has a far better chance to deal with 17 and 17,100. So let's see. On the downside, few oracles. Chola Finance, okay. Fortis, not really. And there is one TCS. No, on the short side, Oracle scan results are not so impressive. So it seems like the index has inclination for a little bit of further movement on the upside going forward. So with this, let's keep this in mind that we are going through a short-term bounce back of the recent correction. The good thing about the recent bounce back is it has kind of taken shape from our anticipated zone of supports, though we have further levels that we have kept in our mind. So it is very important for us to kind of get a confirmation whether this is it or is there still some selling left. If you take a look at the global markets when we record this video today evening, Dow Jones is up a little bit after yesterday's big 500 points, I think, bounce back. It's kind of slowed down, so has S&P 500. But one thing we should remember in this case also, that this was the leg down for Dow Jones and this is just the bounce back. So $1 million question here as well, are we heading down for the next leg down? If that happens, then following the global cues, the Nifty can also deteriorate. So 17,100, 150. I think the index will try its best to find itself in that zone, and then the move either to sustain or to give away is going to give us directional cues. Till then, if you get intraday signals, short-term signals on either side of the market, I think you can take them. You can also look if the market corrects further down, you can also look to add some good quality large caps or index funds or Nifty Bs in your portfolio, right? So it seems like just before the Christmas, for the next 2 days, 23rd and 24th, is going to be pretty interesting for the Nifty and how it will celebrate its own Christmas. I hope you've been taking care of yourselves. Do that and trade well, trade wise.